The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. Very key session today, so let's go through the numbers. You've got the Dow up 103 at 17,824. S&P is up 12 at 2,073. Comp index up 50 at 49.22. The volatility index is at 14.01. It's down 84 cents. This is going to be one of the key metrics that we'll look at. We'll keep going. We've got the, let me just move it over here. We've got gold down 11 at 12.50. Silver is up 0.4. You know, the divergences between the commodities within their own sectors is just fascinating. So silver is at 16.26, and platinum's down 5 at 9.94. Now copper is up 2.40 at 2.17. That's important. Crude oil is at 42.16. A whippy session in crude oil when the numbers came out at 10:30, up, down. And then it started to rally quite sharply. And we're going to see it did impact the market. Market did pull back from its highs. I'll go through that in a moment. Let's just finish these numbers because this is, as I say, a very important session. Bonds are up 8 cents at 8 ticks at 165 and 930 seconds. And you've got the dollar. Now, this is going to be very interesting. The dollar is, at this point, up 72 at 94.67. I think I've covered a chunk of the things that I want to look at. Let's look at patterns. When I'm looking at this E-mini chart, the 120-minute, I couldn't believe. You know, I spoke about this. I showed this to subscribers to my opening call. And don't forget, folks, we've got a great bargain going on right now. If you go to the front page of TFNN, you'll be able to get by tax day on the 18th. If you sign up, if you're already getting or you would like to get any of the newsletters, just check out that front page, real bargains. So here we go. There's the shoulder, head, and shoulder pattern. That's what we call the head and shoulders pattern that I discussed. One of the things I've spoken about for years and years, and they do this in the Investors Business Daily, but they use it in a particular way, which makes sense. But normally, I really dislike the head and shoulders pattern for only one reason. It's not the pattern. The pattern is the pattern. It's just that when you finally recognize the pattern, like right here, see, look, here's the left shoulder. Here's the head at 2064.50 on the June E-mini, 120-minute chart. Here's the head at 2071.50, a little higher. And then it makes almost an equidistant move to the right side. And then and not only that, you get a slightly sloping down, what we call the neckline. All of that's supposed to be very positive. And what happens is the right shoulder bounces from the 2035 level and goes all the way to 2062, round number, on the 6th of April at 2 o'clock. And then it turns around and it takes out that neckline. Oh, wait a minute. It takes out the neckline right there, but not the actual start of it. And it goes all the way down to 2026. And wait a minute. It does exactly the same thing again, but inverted. So now it's got a reverse head and shoulders. It only just took that out by a small bit. And it goes to the upside, and it forms this cup pattern in a Chapman wave, left side, right side, time price match, and it goes right to the very bar right there. And that is the bar of 2 hours ago at about 270.50. The high that has to be taken out for this head and shoulders, the inverted head and shoulders, is a 2071.50 level. So we're going to be watching this real closely, right? In the meantime, back at the range, it started to stall there because there's a lot of resistance. The MACD is good, but look, the MACD, if I had to draw this trend line right now at this particular level on the red, that is the slow-moving average. This is the 26 look-back period right there. You'll see that the E-mini has not gone up to that level, so there's a divergence now. So this is a very important period. There are a couple of things. I'm watching because I'm noticing some frothiness right now. And that frothiness is essentially saying to me, maybe we're not going to go down very sharply, but this is a period that you've got to be watching very closely. So I'm just going to move this 120-minute chart out because there's some other things that I want to look at here. And one of the reasons why we still have one position on the short side on the Dow is because this is an area of very strong resistance. You've got this cup formation that's forming in the E-mini. If I go to the Dow, and it's leg D, as I say, in the 120-minute chart, but crude oil really has been a fantastic benchmark for the move, certainly this move from February. And when you're looking at it, the Dow just made a new recovery high at 17,000, excuse me, 17,859. So that's some 48 points above the previous high. That was peak F. And correctly so, we had a down arrow. But now the signal to sell mode is being taken out. However, this is the right shoulder. This is that move that we can term, sometimes we can term it a right shoulder, or I'm sorry, a right arm extension. Not quite a rogue wave, but a right arm extension. And that essentially says that one of the indicators ran up a little bit to allow it to happen, but you've still got some very weak indicators. And if you're looking here, if you're looking at the Dow daily, look at the stochastic and the MACD. The MACD is still negative. It is rising, but it's still under the green line. The fast-moving average is below the slow-moving average. The on-balance volume is steady, and that's a good sign. But what's really important here is that you've got at 54.23, the stochastic is still quite negative, and the relative strength is over 50%, but it's not that great. So I'm watching this really closely for a couple of reasons. There are patterns, like in the weekly chart, this W formation is still very powerful. And now what we've done is we've started leg C. Today, we just started leg C in the weekly chart. My big concern very often is when you go very sharply to a B and then just a nominal C. Let me show you a very good example of this. Right here, something you might recognize. We use it every day. And it just disappeared. Oh, there it is. Let me just type it in so that you can see what I'm looking at. That is the dollar. And the dollar went to 100.39 back in March of 2015. And in December of 2015, it goes to 100.51. I mean, 12 cents higher. And that started C. And then look at the very sharp move. And this cup formation, when you give back 1/3 to 1/2, there's a really good chance that you're going to test the low, which will be 92.62. It got down to 93.63. So we're going to be watching this real closely. This is a monthly chart. It's almost as if I was talking about a daily chart. And if you're looking at the arch formation in the weekly, that says, you know what, the down move is not quite done. But let me do something else. Let me look at the gold contract. And you'll see that gold has made a peak C. It pulled back to the 9-period moving average of 12.44. It's trading right now at 12.49. It needs to go above 12.64.70 to start leg D. And there's still an arch, a cup formation. We'll talk about these when we get back and why there's just a chance we could still pull back, but other things are happening at the same time. I'll be right back.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Commodity Solution CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar, in one powerful CD. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The April 14th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. Basil Chapman, Tiger Technicians Hour. Dow's up 110. S&P is up 12. And I'm going through the patterns that we're looking at. Let me just extend this for a moment right there. That's the inside track, Chapman Wave inside track buy zone. And that's exactly where the gold went to, and now it's rallying. As it stands right now, my thinking here is that gold is in a choppy sideways move. I'm not sure. It could still go to that leg D in the daily, but my thinking right now is that there could be a little choppiness to the side. We're getting very close to where I would expect a deeper pullback in the gold stocks. They've had spectacular moves. But the way that the weekly has led to the monthly suggests to me that gold is in play now, and that we've already been going since we've gone 1, 2, 3. This is the 4th month, and that we should, normally I would expect something like a 6-month rally. And that would say that the dollar, which often has a longer term move, actually always, dollar, when it travels in a directional move for a very long time. So I'm thinking that the dollar should make lower lows. Having a bounce right now, 95.67 would be really strong resistance if it was even to try for a break above the high of the 6th of April at 94.60. So it should be making some kind of an arch rather than a cup formation at this time. But what's really important about gold, let me go to the GLD. GLD. The GLD is at 119.07. It didn't even touch the 118.68 9-period exponential moving average. And this so far is an inside buy mode that's gone to, because it's 81%, I can call it a mode, gone to a peak C, and there should be a nominal high over the coming days. But I can just tell you this. It'll stall that leg D if the GLD at any point in the next, today's Wednesday, by Friday afternoon, if the GLD is under 118.33, somewhere around there, let's call it 118.30. If it's under that, it'll take a little more time. It might even have to test the 117.04 9-period moving average of the weekly chart. But at this point, the GLD is that magnet of the 200-period moving average at 121 is still in play. And I just think this is a time rather than price consolidation at this point. I do think that we're getting real close. Let me just look at ASA, which is one of my little benchmarks here. You see that spike, 3-gap play, 1, 2, 3. Now we're stalling. There are some here, some of the Tiger family are really very comfortable with trading and working with the 3-gap play. I don't do that. I just look at it and say 11.46 on ASA, which is at 12.28. Many stocks look like that, but 11.46 would be the level that I'd look for. And if it closes under that, 11.10 would be the next support. But in this case, that vertical move to the upside is both positive and a shorter-term negative. That's in the weekly chart because the stochastic is very strong at 89%. That to me is a benchmark. So let me just sum things up here. I had a couple of emails. Let me just do this here. I'll deal with each email as they came in. The USO is trying to test in a V-shaped pattern. I thought I drew this. I guess I drew it on crude oil itself. Let me just do that here. I'm going to do it at exactly the price point that we'd be looking at for a price time match. This is the strict way of doing it. The plumb line, I call it, or the T shape. So in this particular instance, green, we're looking at the high that was made in the USO at peak F at 1080, 10.80, and that was on, was that the 18th? Yeah, the 18th of March, and it pulled back very sharply to $9, $8.99 to be exact. So now you've got a V-shaped recovery, and that makes this very important. Why? Because in this particular instance, because the start of the move right over here was down at 767. Remember, can't believe I didn't actually believe what I did. I had drawn in the Elliott wave based on my reading, going from the high that was made on the 9th of October at 1620, and this is the daily chart. I had a 1, 2, 3, 4, 5, and then another one, and I had within this one move down 2 Elliott wave 5s to the downside, and that went down to 767. And we did have a mini buy at 916, got taken out for a very small loss, 1%, and then it started to move higher. I just didn't get back in. I tend to do that occasionally. I've got to remind myself, don't do that. I like to time it to the exact turn, and if it doesn't work out, sometimes it goes off my radar. That's ridiculous, because that was a serious move, going from 767 to 1080. 3 points is a 33% gain or more. So this is very important. So for the questioner, I would be looking at 10.81 will be the start of leg B in the weekly. That's what you want to see. You make a leg B in the weekly with a stochastic rallying. It says basically you've raised the base to the last low, in this case a low of 8.99. And that was that move that came down on the 5th of April. So this is very good action. It's a little surprising because the dollar, as I said, the dollar DXY is acting so strongly. Look at that move. But it did have a long-legged doji. And sometimes with a long-legged doji, it looks like it's great, especially if it closes above or below the wick, the long-legged wick, high or low. Because then what happens often is it has to do a little retest towards the candle, but that would be really a big test, 93 to get to the 96 close. That would be big. But if it did that, then we got to reassess everything. If the dollar doesn't do that, and by Thursday, not by Friday, by Friday afternoon, if the dollar is testing the high of the 6th of April, 95.07, I think that might put some pressure on the gold. Maybe crude oil is a little bit different now. It's taking a different, trough G bottom is possible. That's a question in the den. And let me just do this. There was a question as well going together with currencies and commodities. The euro made a peak D yesterday. Yeah, it made a leg D yesterday, and today seems to be confirming a peak D with the MACD turning down, stochastic turning down. But we're looking at the weekly chart, and the weekly chart is 1.21 support. So I'm just going to put a plus sign here because the day's not over, and we've got to see where it closes, etc. So if the euro starts to pull back, that'll allow the dollar some room. You remember, I'm talking about the euro just forming this arch formation that goes to a lowercase m formation. So this, I think I've given a bit of an overview there. Next question. So let me answer the question one more time because I might have not finished my thoughts. If the USO closes decisively over 10.80, goes to 10.93 or something like that in the next 2 days, I have to consider that that is potentially a leg B. If it does it after peak B, it'll be a leg C rather than a G/C because the stochastic and MACD are acting very well. So yes, crude oil is acting, it's playing catch up, and it's doing very nicely. I've got tremendous support between $9.50 and $9 in the USO. Then we'll get to the next questions. Sell in May. Riding high in April, shut down in May. We'll get to that. I'll be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
John Logan has just announced that he is hosting a workshop Wednesday, April 20th for all TAS Profile Scanner Plus subscribers, opportunities in the current market, and strategies to profit. In this hour-long workshop, John Logan will use the TAS Profile Scanner Plus to give you a current breakdown of the sectors in the market and the opportunities that are present, as well as providing subscribers with the best strategies to trade with to profit when using this powerful piece of market scanning software. Right now, you can sign up for the TAS Profile Scanner Plus at the front page of TFNN.com. The TAS Profile Scanner Plus is such an amazing piece of software that we're even offering a no-questions-asked money-back guarantee for all new paying subscribers. Don't delay, as John Logan's subscriber event is coming up soon. Sign up now for the TAS Profile Scanner Plus and be up and running within minutes using this powerful piece of market scanning software. With a 30-day money-back guarantee, you have nothing to lose. Sign up today.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. Dow's now up 142. S&P's up 15. This is a serious market. This is a market that is actually, look at this. Let me show you one quick thing here. See, there's your This is today's action of the SPY. 5 minutes green is SPY and 5 minute red is the USO. USO pulled back sharply, and yet the SPY is still breaking out. It's really very important that the SPY. Let me get to the SPY in a second. I've got this up because it's the FXY. I was asked about it, currency shares, Japanese. This has got a peak E right now. I'm calling it a peak E. I'm putting in an inverted V for that because that was the down arrow at D. It made perfect moves to the upside before. And this is the FXY, which is, whoops, the mouse is moving around. Grab another mouse. There it is. So you'll see it made a perfect from the low that it made back in November. It went to peak D, pulls back, goes over the 200 period moving average, goes to peak F, pulls back, holds the 200 period simple moving average, grabs the upside, and it goes peak A, B, C, D. And this is, I'm calling E for now. So it says that the yen could have a little bit of a rest. And I've got a leg D, possible peak D this week in the weekly chart, and the monthly is in leg B. So all of these are already coming together very importantly. So let me just do two things here because that was the question. So the IYT, this is the next question. The IYT, when I saw this earlier on, I said, oh, it looked like it had Chapman wave falling axe formation and was failing. And then the IYT, the iShares Dow Jones Transportation Index Fund, went to peak A, pulls back under the 9 EMA, and then this morning gaps up. This is with crude oil rallying. It grabs that 9-period moving average and says, I'm a springboard. Pow, it goes over the dashed line resistance. Huge move up 3.55, up 2.55%. That is big. That is really important for me. And that's saying that it can start to test the down move in the, right there, in that very long-term weekly chart that made a high way back in November at 167.80, goes down to 114. When I did a lot of work on this over the weekend, and I'm looking at these different stocks and indexes, and I look at the kind of declines that they had in their most recent declines, I looked at it and I said, gee, if I didn't know better, I would have thought that the general market would have pulled back really sharply. You know, I'd say this before. UTX going to a new recovery high today at 104.39. It's a good sign, up at 131. Goes from 124 down to 83. If I didn't know better, I would have said, wow, the general market must have had 22% decline, not a 15% decline in the Dow. So as I'm doing this and as I'm looking at the chart right now, I have to say to myself, okay, you were expecting something to happen. Let me just quickly define this because I think it's very important. I said it's a very important session, for me at least. The breakout that we're having now in the Dow, the breakout that we're having, you see that W formation in the weekly chart? The breakout that we're having in the SPY, let's just go to the SPY. It's over the left side high. Now, is this brand new leg A or is it a G? It's going to be, I have to renotate it because what will happen is that high of the 17th at 205.23 gets a down arrow, then gets an up arrow, and now we're in leg A, B. We could be in G/C. In other words, this could still be bullish for another couple of days. And you've got yourself a new leg C in the weekly chart. We were supposed to pull back. Instead of being up the 300, 250, 300 points right now, we should have been down based on the patterns that we were looking at. Because we are not, I will not fight the tape because my thinking here is that somehow or other, we will go to a new all-time high for that leg that starts the monthly buy mode. And then we can have a very sharp pullback, but not taking out the lows that were made in January, or certainly not October. So I'm going to do this very, very, as many of you know who have my newsletter, we have longs, we have shorts. Some of the shorts actually are still acting quite well, one in particular. So I'm going to treat this as if We're looking at it fresh tonight. We've got to wait for the close. Anything can happen with the close. But I cannot, under any circumstances, if the stochastic in the MACD of the weekly chart is now at 91% and the MACD is still good, as I said before, my expectation was that we would pull back to the 17,400, where I'd have to make a decision about going long for that move to the top side. Well, we never pulled back that far. We went to the 17,500. So we were close, but that's not good enough. Now I'm looking at it and I'm saying, okay, high-level consolidation, rotational market, had every opportunity over the last 4 or 5 days to really tank. Even yesterday at this time, remember, the oils pulled back, and all of a sudden you got the market up 150 going to a down something on the Dow, and then it turned around and closed very strongly. I am not going to fight that. So as it stands right now, the QQQ series was lagging. It's broken out. I've got an alternate count D. Remember, that's what I'm talking about. So this is a leg D. The weekly chart is still in a leg A from the move at 95, 94.84 to 110.82. Very nice action. So, and going back to the USO, look at that. All right, let's go to Joe in Boston. Joe, how are you?
I'm well, Basil. How are you?
I'm well, thank you.
Yeah, we spoke a couple of weeks back about the silver SLV. I've got a position. I'm looking to continue to build on that for the kind of longer term, and I had an opening position, and we talked, and I did add to the position, and I just wanted to see what you thought about it here.
I like the action right now because, AB, however I count it, it looks like, first of all, it looks like silver is playing catch-up to gold. This is
That's
something
what I'm thinking as well.
Right. So this is something that in the history, it's a little bit, I always think of a particular game that kids play. I've never really known what the name is. It's where they're in a line and then they're running, and then one person on one of the ends stops, and then the rest keep going. So this is very much like we've seen with gold. You've got this the tailspin, because gold has sort of stopped dead right at this moment, and all of a sudden you've got yourself the silver, which has taken over. I like it. It's in leg D in the weekly. Now, what I would do, what I'd say to you is this, Joe, you would like to add for the longer term. So there are two ways of doing it, because you've got some really nice, good entries with a nice cushion. I don't know if you want to split it into two, how you would add it. And I'll explain why I'm saying splitting it into two. The left side high of 15.60 in the SLV, that's the iShares Silver Trust, made in October, is just about to be challenged because the high today is already at 15.50, so it's real close. My thinking is it'll go just a little bit above, and then it'll probably digest some of the gains. So if you got in right now, I would say that's fine. That's not the best position for the intermediate term, because I think it'll be retested, and then you'll find that you could have got a better position. Can you hold on? Because I want to tell you what my alternative is.
Yeah, I'll hold through the break.
Okay, great. We've got Joe in Boston. Dow's up 158, S&P's up 17. I'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has just announced a new Tiger Dollar sale that will run through this coming Monday only. It's tax day on April 18th, and what better time to lock in extra savings on any TFNN good or service with the purchase of Tiger Dollars. From now through April 18th only, we've doubled the bonuses that normally come with any Tiger Dollar purchase. Instead of a 10 to 20% bonus, we've doubled each number and you can now get a 20, 30, or 40% bonus on whatever you spend. Tiger Dollars never expire and can be used for any TFNN good or service. Once you purchase your Tiger Dollars and receive your 20 to 40% bonus on whatever you spend, you can then apply them to your subscriptions going forward, as well as any course, workshop, or service that we offer at TFNN. Don't forget that tax day falls on April 18th this year, and now is the perfect time to get your Tiger Dollars. For all the details and to get your Tiger Dollar bonus today, visit the front page of TFNN.com now. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks, we're back. So we're on with Joe in Boston. I said I'd keep looking at the SLV. So the reason why I said that this is leg D in the weekly chart, we're getting close to some resistance on the left side, and that since he's already got some really good positions, to add another position now, when my guess is that even if it goes a little higher, it'll come back to the 1542 level. It means that I would rather split it into two parts. So the one part says, because this is leg C in the recount of the daily chart, you could add a little position now at 1542, and I wouldn't, because there's such a little difference if you're going towards the 200 period moving average of $17.81 in the monthly chart over a period of number of weeks. Then there's no real difference between 30 cents buying it now at 1541 and saying, all right, why didn't you wait? So I'm going to say buy a little bit right now, realizing that you're at the upper end of the range where the resistance could come in of $15.60. But the real beauty would be if you could get it under 15, the second part of that. So you can nibble here, looking for your intermediate, adding to your position for an intermediate term play, but it's really under 15, towards the $14.90, $15 area. That's where I think would be a very good third entry. In other words, you got your first two, now you can add a third one. But that's where, if it does pull back, it might be a little time before it gets there. But most importantly, that's the one that says if it's going to make an intermediate term move, meaning months, not just weeks, you want to see it start to climb and go towards the $16.80, $17.20 level, so you can show a real good sign of making a cup formation to go somewhere into by June or July. Well, I would even say maybe even May. If this acceleration continues, it could get there. So two positions. One is you could start one right now at 1542, but it's really split in two. And I'd probably even say a little less now and a little bit more later on a pullback. And you want to see a pullback when it gets to 1520s, after this rally is completed, that's when you want to start looking at it and say, okay, a little more, and then you want to grab it, and that'll be your position. And that's the position that I think should take you to the 17s. This is the one that will take you to maybe 16, what did I say it was? $15.60 to maybe $15.80. Hope that helps you.
Yeah, that sounds good. So for that second half of the buy, do you think it'll get back down into that gap, that recent gap where it gapped up from 1455-ish up.
This is a massive gap. This is one of those really big island gaps. That's what we're talking about.
I'm wondering if it's going to get back down into that 1470 range. Maybe kind of close that gap and maybe jump on it there.
My suspicion is that when it does get to that gap, it's going to go underneath 1493, and it'll go. How it handles that is going to be very important. I'm not sure where the 9-period moving average is, but my thinking is that if it fills that gap, it'll fill it there for about two weeks or so. That's what I'm thinking.
Okay,
and
that sounds like a good strategy.
And Joe, I'm not sure it's going to go all the way down to 1465, but it should come into the under 15 area, into the 1490, 1480s. That to me would be a nice position.
Okay, perfect. Thanks, Basil.
Thank you for calling, and congratulations on those entries. So, folks, let's go back. What are we doing for time? We're doing pretty well. I should have got the clock right here. We're doing okay. So I need to do a couple of things. When we're looking at the defensive stocks, like a Coca-Cola, had made a peak. Oh, now it is a confirmed peak F. And I spoke about this with subscribers over the weekend. I said the defensive stocks, not defensive stocks, like a Coca-Cola. Let me see what a K is doing. Kellogg's made a peak F top. Oh, my goodness. You see, now we've got a rotation from the safety. We're even seeing that in one of our stocks, which is a dividend stock, which has had a fabulous move up and gave us the dividend the other day, starting to pull back after making, I think, a peak E. So that says that the defensive stocks are starting to pull back. So that's one of the reasons why you're looking and you're seeing in Triple M and UTX, United Technologies, and 3M moving up so nicely. I'm a little concerned that GE, maybe now it is. GE's not really participating in this. And that's another reason why I thought that the upside was somewhat limited here. So we'll monitor it. That's all. It's made a leg B, but it hasn't made a really big leg B to the upside. So we're watching GE. So a couple of things. So that's Coca-Cola. Kellogg, let's see Clorox. I don't even know if I've done Clorox in a long time. Yeah, Clorox, whoa. Weekly chart has gone to an A, B, C, D, E, and also an F. Look at all these peak Fs in the Chapman wave in the different charts that we're looking at in the defensive area. Give me another one. So Pepsi, PEP. Oh, I haven't done it. Okay, doesn't matter. I had it the other day. All right. So, that's right. When my electricity suddenly shut off after my show, couldn't believe it. I lost some of the charts. So some of the work that I just redone recently has to be redone again. So yes, we've got. Is that a high? 100.82. Okay. So what have we got here? We've got an A, B, C, D, E, F, and a G in the and a leg D in PM, which is Philip Morris. So Philip Morris is saying also a defensive looking stock. I'm getting a little tired. I need a break. So we're looking at all these defensive stocks and every one. Oh, wait a minute. 102 round number. Thank you in the den. Well, we always look at those round numbers. So PM, which is Philip Morris, we're going to monitor this real closely. 102 round number high on 4/13/16. Of course, if it takes it out, I'll have to say, well, that didn't work. But in the meantime, we're looking at this, so the defensive stocks are starting to pull back. That's very important. One of the reasons why we've got to run. Now you've got the oil stocks. CVX is testing the left side high. You remember? We spoke about that yesterday. Chevron made a high recently of 97.91. And the high today is 97.90. Missed it. Oh, yesterday it went to 97.94. So that's either an E or it's recycled to a B. I'm going to put an E/B. All right? And that says, and I'm putting a little plus sign down there to say that would be the start of a cup formation and the start of a new move to the upside. It is leg D in the weekly. And now we've got to look at ExxonMobil. ExxonMobil rallying. It's not great, down 1 cent today, but it is rallying towards the 200-period moving average of 85.60. That's at 84.37. So it's a little bit of a mixed market there within the category itself. So question, WFC. Oh, XLF. Let me just look at this. XLF. Nice move. Leg B in down. Leg B in the weekly chart, and leg. This could be a brand new leg A or a G in the daily. Oh man, this is a good action. Breakout right onto the 200 period exponential moving average. I better put it G/A just to make it real clear. And we don't really know right now why. First of all, the day's still young, and we don't know where it's going to close. So I'm looking at this and I'm saying, okay, we've got ourselves the beeper in the background, and we've got the XLF possibly breaking out. And I'm going to have to monitor this. I'll do some work during the break. And then a couple of other questions. I'll be right back.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi, folks. We're back, going straight to Scott in Safety Harbor. Scott, how are you?
Yes.
Yeah, I can just imagine that if you got your Alcoa, certainly at the low yesterday.
I'm not talking about Alcoa, but I want to thank you for your call on Pod POT. I went ahead and took your advice on it, and then I just bought the nonsense out of it when it got back into the $15 range, and then we got a snap up and moved the whole lot today at the $16.50, so it balanced out perfectly, and I made a really good profit. But in light of everything that's happening today, I think that we have a lagger in Alcoa, just because I think people are just uncertain about its future. But again, I mean, when I don't look at things, as you know, that when everybody else is looking at them, I'm not interested. it's the one over in the corner that I'm interested in. So I'd like to get your take on Alcoa.
So Alcoa, this is very interesting. The fact that it had the earnings disappointment, it just does this so often. It's disappointment, and then it spikes pre-market and then post-market, and then overnight it collapses. Next morning it's down sharply, and then it's bounced. It's done that a few times now over the last year. So I like that
people would learn now. I mean, it pretty much does the same thing every time, you know.
It does.
I still have a great expectations for it in the near future.
I looked at the steel stocks. I was hoping for a pullback here because steel, as I'd spoken about steel a long time ago. We actually had some steel stocks took some profits at some point and then didn't get back in.
The other day, and I was a toss-up whether to get in POT or X, and I got in POT, and X, of course, bolted up, $2.50.
It did. So let me just do this because we're going to run out of time. I like Alcoa. I suspect it could go a little bit sideways for a bit. The weekly chart's holding. It needs to hold 9.36. The 9-period moving average is at 993. I suspect it is going to make a leg C to the upside above 10.22. So what I'm going to say to you is treat it as just for the moment, still treat it as a pop-up stock. You take your profits and you come out. But looking out for the steel stocks, I really like what I'm seeing. So I would love to have a pullback in the next week or two in the steel stocks and have a reset and then see if we can get the next move to the upside.
X has had so many positive articles that I just don't think that we're going to get any decent pullback on it. People are so motivated into it right now.
Yeah, and that's the reason why I'd say to you that maybe with Alcoa, you might want to just think of some kind of something to have as a core, and then you just trade around and you don't care about that. So, hey, congratulations. That's really nice to hear on Potash and on Alcoa. Hope to hear from you next week, Scott. Have a great week.
Thank you, Basil.
Thank you very much. So, folks, just as we're about to wrap up, let me just do this one more time. The VIX index, make it as easy as you can. And it looked like it was going to rally. It didn't. It's gone under 14. It's a 1392. Under 14.50. It says there's buying pressure. In the 13s, buying pressure. The moment it starts to go into the 15s, you'll see selling pressure. Just keep it as simple as possible. Right now, there's just no question. You're seeing support, you're seeing buying pressure, and that's the way I'm going to be looking. I have no choice but to look at it. That doesn't mean to say there aren't stocks that are looking weak. There are some stocks that are looking weak, and there are some in the healthcare, some there, auto parts, etc. But there are a lot of stocks that are just really starting moves right now, and we need to be looking at those. So don't forget, go to the front page of TFNN. Check out all the specials that are going on there. Great workshops going on. Just a lot of things. Go to the front page of TFNN. Now, let me just tell you about the Dow at this particular point, INDU. If the Dow closes above 17,811, that's a close above the previous low where I got the down arrow. We've seen before where it has a move up, a right shoulder pattern, and then I have to put an inverted V shape. I don't know yet, but the stochastic and the MACD are really not quite confirming this move. So we're going to be watching this one real closely. I'll be back tomorrow, and have a great day. Check out my opening call. And stay tuned for all the great shows coming up.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.